Hello and welcome to the weekly's Commodity Corner with the Gold and Silver Club in alliance with ACM Gold, presented by myself, Phil Carr and Nik Kalsi. Today we'll be reviewing the latest developments in the commodities markets and analysing the week's performance. The live session will cover an end-of-week summary for gold, silver, oil, natural gas and the commodity currencies. We'll be looking at the top trades of the week, covering live market commentary and technical analysis, and we'll be looking at the week ahead, so key events looking forward, and of course answering any of your questions on today's webinar too. So we're going to move across and take a look at the major fundamental news this week. So the big news being that gold price hit a 3-month high ahead of the minutes released by the FOMC. So on February the 18th, gold price peaked to a 3-month high of $1,332 an ounce in the run-up to the release of the minutes of the FOMC, and gold price fell on profit-taking triggered by comments in the minutes indicated an ongoing commitment by the Fed to continue trimming its quantitative easing program. So since gold prices hit a low of 1185 in December 2013, right at the end of December, the precious metals have booked impressive gains of 12% before the week. Before midweek, when we saw a downward move kick in after the minutes released from the FOMC. So the FOMC, the minutes from the January meeting showed the committee unanimously voted to reduce the amount of its monthly asset purchasing program by a further $10 billion to 65 a month. According to the minutes, the FOMC decided to change its forward guidance as the unemployment rate approach 6.5% threshold. Gold was supported as FOMC officials said the emerging market turmoil could pose a risk to the US economy, but the knock-on effects of recent developments were likely to be modest. From a technical perspective, gold's 7-week uptrend is still in place on the daily chart. We'll take a look at that with you, and we remain bullish for gold prices in the near term. So we've got some interesting setups to take a look at today. Before we do so, a little bit of background on the Gold and Silver Club. I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world: gold, silver, oil, natural gas and the commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio, and I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nik Kalsi, professional trader, investment analyst and speaker. Nik began his career within private wealth management in 2002 before making the transition into proprietary trading. Now, prior to co-founding the Gold and Silver Club, Nik spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. Through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that give any individual the definitive edge to trade in any economy. Also regularly writes to a number of global business and financial publications, and we've appeared frequently on financial television. So that's some background on the Gold and Silver Club. We'll take a look at the gold price at the moment. We're currently trading at $1,321 an ounce. So we're only about 100 points off the 2014 highs and 3-month highs as well. So we look set for some interesting moves, either over the rest of Friday afternoon here or possibly into the beginning of next week. So we'll take a look at the technicals very, very shortly. Before doing so, the top trades of the week using the Gold and Silver Club's signature trading strategies are as follows. First of all, the beginning of the week we had a really nice strong setup on WTI crude oil, which closed on Friday with very nice setup just around Fibonacci levels above key moving averages. You've got a nice hammer setup there. We got triggered into that at 131 on WTI crude oil, the risk on that 100 points, and we came out hit 2-to-1 profit target automated for a 2-to-1 for 212 points, so $2,120 profit for each lot traded for a nice 2-to-1 there on WTI crude oil at the start of the week. Brent crude oil then triggered. We triggered really, we had a huge move on Brent. Again, hit our automated automatic take profit target here for a 3-to-1. So we had 50 points risk on the trade. Our take profit was 143 points. $1,430 profit for each lot traded. The entry there was 109.32. We exited at 110.75 and the profit was 119 points. And then finally, we had a great trade on gold this week. This was prior to the FOMC, we produced a nice sell short setup just around key Fibonacci level at $1,324 an ounce. We entered at 1,321 and we came out at 1,310. Nice 110 points profit on that. The risk was 50 points, reward 110 points, and we had it hit a 2-to-1 over the FOMC as the price continued to come down. Those 3 trades have been quite meaty trades this week, so just shy of about 500 points that we've done on 2 oil trades and a gold trade. Those are our top trades of the week. We've had more trading opportunities over the course of today as well, which we'll talk you through. So the market's looking very interesting into the weekend here. So let's take a look and we'll do some live market technical analysis with you. So bear with me as I bring up my charts. Okay, so the first market I want you to take a look at is going to be copper, because copper is looking very interesting. So a few things to note here. On the daily chart, we have a V-shaped reversal pattern forming on copper. So I'll just take you over to here. So we've got a nice V-shape, very strong move here. Got a almost symmetrical V. We've broken out to the upside here on copper, and now what I'm looking at is I'm just going down into the 4-hour time frame, and you'll see how nicely this trend channel is playing out at the moment for copper. We just bounced off there. We've had 1, 2, 3, 4, 5 bounces off that level. We can draw in the upper resistance trend channel here as well. We just bring that over slightly. We can see how well we've been channeling here on copper. I'm expecting a nice move to the upside here at the moment. It is in fact a position we're long in right now, so I'm personally long this at the moment. There does look like scope. There's more opportunity to get in this at the moment. We've got circa another at least 26 points to the next Fibonacci and about another 37 points until we hit the upward trending resistance channel here. So copper looking really good and looking really lucrative. All the metals are looking quite interesting today, but I do like copper at the moment. As we continue with this overall upward trending channel here on copper, we look set for further gains at the moment. If we take a look at the correlations here with silver and gold too, silver is going to come to a resolution very soon. On the 4-hour time frame, we've just got a nice pennant which is forming. So we're going to get, you can see the price just tightening up there, ready to burst. Now typically what we see is when a pennant forms, it breaks out in the overall momentum of the prevailing trend. So the prevailing trend is an upward trending channel at the moment on silver, but we'll see which way that's going to break. We're keeping a close eye on silver today. Also, if I go out to the daily time frame, there's a lot of pressure on the daily as well. We've got a nice opportunity. I'm certainly going to be looking at opportunities here on a break above 22, sorry, on silver. So that looks like we could have some lucrative trade opportunities. Let me show you what I mean there. So at the moment, let's just bring that up for you. Just get a screenshot. In fact, I'll tell you what I'll do, it's probably going to be even easier. We've got a nice consolidation zone here. On silver, you can see we're moving between 21.30 to 22. That is our zone of consolidation where we're just seeing the price move between. And all we want to do here is we are going to be looking at a breakout of this current consolidation. So if we can break above the 22 level, we'll be looking at 22.25 and 22.46 as the next key levels. We are currently being supported by a number of moving averages in the prevailing trend on silver. So whether we break out today or if it's going to be early next week is yet to be seen. So we'll see when we're going to get this move. But we're going to get a resolution soon on silver, and it looks more likely we're going to get a breakout to the upside at the moment. So we'll be monitoring that on both the day and the 4-hour time frame. So silver looking very interesting here. Silver, copper has already triggered long, so naturally we are going to move across to gold now. Gold also, we've got this very strong upward trending channel. Last week was important. We managed to close above the 200-day moving average on gold. We're also well above all of its key Fibonacci levels. Nice hammer on the daily, just below the $1,325 an ounce Fibonacci level. We really need to just clear 1,325. We need to get a breakout above that level, come up to 1,330, actually it's 1,336 on here, 1,340. And once we get a clear break above those levels, we should be set. There's nothing really to stop gold once it clears 1,340 to get to 1,354 on a breakout. A key level, if we were going to see a pullback here and if we were going to potentially get a reversal in the markets, we'll just keep an eye on the weekly time frame here. We've got weekly, we do have a bit of an inverse hammer forming. We want to see if gold struggles today and this forms an inverse hammer similar to what we got in 25th of August here, then we could be due a reversal next week if that triggers to the short side. We'll be mindful of that, but at the moment, so gold really, it needs to try and close above 1325 today, but we're going to get a little bit of pressure all around this area. So gold looking very lucrative. You can see the overall upward trending channel that we've been in on gold. There's a couple of different channels you can put onto the chart here as we continue to move to the upside. So really want to see moves above 1325 and really above 1340 to get more gold bulls interested for a breakout to the upside. Otherwise, a break below 1300, a close back below the 200-day moving average, and we're probably looking at 1280 as the next key level of support. So metals are definitely one to be watching today. Now, we had a short position earlier on in our live trading room this morning on Australian US dollar. We got triggered on to this just below 0.89809. That's working its way back down the this trend channel, which we've been in for the last few days. Actually, we've been forming this trend channel since we failed to break this Fibonacci, which we put in mid-January here. So we came up, we tested ever so shy of it, and we've just continued to stay in this downward trending channel for the time being on Australian US dollar. So it looks like we could come down, get a retest either of yesterday's low here, which was at 0.8936, or potentially the Fibonacci below at 0.8923. You can see it's just working its way lower again here. So this is our entry point. We remain short Australian US dollar in the short term. We'll probably bank profits once it comes down to the next Fibonacci level below, which would just mean that the market just comes down like this, comes and touches the lower trend line, comes and hits the Fibonacci. We'll get out, take our profit, and then we'll wait for the next setup. So Australian US dollar looking a bit weak here on the 4 hour, but we're taking advantage of that move. Now, if we move across to WTI at the moment, so WTI has actually had a great move. We've had some really nice trades on both WTI and Brent this week. So the WTI breakout was from these two hammers here. We continued in this upward trending channel. We continue to break out to the upside in WTI. So it's following a really strong upward trending channel, which we've been since the beginning of January here, and we just see continued moves to the upside. We find resistance at the upper end of this trend channel, but we are looking, if we can find support around the 102.25 level here, and we continue to work our way up. We're looking at 104 as the next key level, which would be 150 points higher than we are at the moment, and ultimately I'd like to see the price get to 105 and 106 following the bullish momentum which we normally see over the month of February. For those who've joined our earlier webinars in the month, February, as we've said, is always a bullish month for the energies. It's been bullish for natural gas, it's been bullish for WTI crude oil, it's been bullish for Brent. This has been helped a lot by the big freeze in the US, which we've seen increased consumption, certainly of natural gas, and that has helped the energies to spike over the month of February. So we've had some really nice moves on those. We'll just quickly, we'll come over to Brent and we'll refresh that contract for you, so have a look at the moves on Brent at the moment. So if we have a look at the April contract on Brent, Brent has also had a really nice move. We'll go out to the day, had some nice trading opportunities. You can see over the month of February, it's been huge. I mean, this has just been a great swing trade. We're still in this for a longer term swing trade. 500 odd points up at the moment. If we move over the daily, we've got some interesting candles here. We're continuing with this overall uptrend at the moment on Brent. I mean, if you look at natural gas, Brent, WTI, all continuing to stay within this upward trending channel. Getting a bit of a pullback today. I want to see any pullbacks towards 109.80 Fibonacci levels seem to be treated as buy opportunities at the moment. If we just put it in the 4 hour, you can see this trend channel as it's developing here on the 4 hours. We continue to see the market just test those levels and then find support. It's consolidating a little bit at the moment on oil. For me, we've made a lot of money on oil this week already. Unless there's a clear signal, we won't get into any other trades until next week, because our main focus today is definitely the metals. I would say number one trade at the moment is copper. In fact, excellent. Look at that. It's on its way. We just want it to come up to hit the 3.35 Fibonacci level and the upper end of the trend channel. So copper, I would say, is our top pick at the moment. Australian US dollar, we are short. We're already hit a 1-to-1. We're looking for come down for a nice 2-to-1 at the moment. And I would also take a look at gold, see if we can break $1,325 an ounce. That's the key level for us to break out for on gold. And I would look at silver. I want to get in silver if we can break on the daily above $22 an ounce. That's what I'd like to see for a breakout of that pennant, give us a nice solid confirmation. So there's loads to be watching out for today. Keep an eye on the metals. That's where you're going to have your trade opportunities over today and into early next week as well. So let's move over and we'll have a look at the key news announcements which are going to affect the markets next week, particularly for commodities. Okay, so the major news announcements, we're going to cover 6 major news announcements that normally affect the commodities markets quite significantly. So we'll go through these one by one. First of all, we have next Tuesday, the 25th of February at 5 p.m. CAT time at Central Africa time and 10 a.m. Eastern time, we have the US consumer confidence. So that index measures the level of consumer confidence in the economic activity. It is a leading indicator as it can predict consumer spending, which plays a major role in overall economic activity. High reading points to higher consumer optimism. So this does affect the US dollar index, which inversely affects gold and silver. So a higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish for the US dollar. Next Wednesday, the 26th of February, we have US new home sales. That is at 5 p.m. Central Africa time, 10 a.m. Eastern time. Now that's important again for the US dollar, inversely affects gold and silver. That report measures the analyzed number of new single-family homes that were sold during the previous month. The report tends to have a greater impact when it's released ahead of existing home sales because the reports are very tightly correlated. So that will affect the US dollar index and gold and silver. Next Wednesday, of course, for all of you energy traders out there, US crude oil inventories is a key announcement on our calendar every week. Wednesday, 5:30 p.m. Central Africa time, 10:30 a.m. Eastern time. That data reports the number of barrels of crude oil commercial firms have in inventories, and commercial firms report their inventory levels to the Energy Information Administration on a weekly basis. So a higher than expected reading should be taken as bearish for crude oil, while a lower than expected reading should be taken as bullish. And the other 3 major announcements we'll be looking out for include the following. So we've then got next Thursday, the 27th of February, 3:30 p.m. Central Africa time, 8:30 a.m. Eastern time. We have the US core durable goods. That report measures the change in the total value of new orders for long-lasting manufactured goods. So it excludes transportation items. That core number gives a better gauge of ordering trends. A higher reading indicates increased manufacturing activity, and a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. That will inversely affect gold and silver. Next Thursday, for all of you energy traders, we also have the US natural gas storage report. That's important for your calendar too. 5:30 p.m. at Central Africa time, 10:30 a.m. Eastern time. So essentially the Energy Information Administration, what they do, they provide a natural gas storage report measuring the change in the number of cubic feet of natural gas held in underground storage during the past week. So while this is a US indicator, it does tend to have a greater impact also on USD Canadian dollar if you trade that, and due to Canada's sizable energy sector. And next Friday, we've got 3:30 p.m. Central Africa time, 8:30 a.m. Eastern time, US GDP. So gross domestic product measures the analyzed change in the inflation-adjusted value of goods and services produced by the economy. It's the primary indicator of the economy's health. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish for the US dollar. Those are the 6 major news items you really need to note down as a commodity trader for your trading into next week. Now, if you want to take your trading really to the next level, there's a couple of things that you want to be noting. Of course, everybody on here who is on this ACM Gold webinar in collaboration with the Gold and Silver Club, a major bonus that you get with ACM Gold is, of course, that you can fund your accounts there locally with the Rand as opposed to having to move money offshore. So it's a very straightforward process. It's the only broker actually in Africa which allows you to add funds onto your account in Rand as opposed to having to transfer it to dollars, which is a huge bonus. And this is why we like it, particularly our South African clients who will trade with us like to be able to use ACM Gold. Now, in terms of trader education, if you want to take your trading really to the next level, find out more about our live trading rooms and join our International Gold and Silver Club community, we do have workshops coming up. You can find out more about the next Gold and Silver Club Masterclass workshops on the following. So you can request information. You can either call us at our office number. Our staff are there right now ready to pick up, so +2711-083-8403 if you'd like to inquire more, or feel free to email us directly, office@thegoldandsilverclub.com. You can also just go to our website and just fill out the form on jointhegoldandsilverclub.com, and you'll be sent further details on all our upcoming workshops too. And of course, make sure you take advantage of our newsletters. You can subscribe just at www.thegoldandsilverclub.com, receive free weekly gold, silver, oil, commodity currency news, live market analysis, and prices. Let me just take you back. We're just getting a couple of questions with regard to the how to get in touch. So that's, I'll leave it on that screen, guys, for you all, so you can find out further details here. So that is a wrap for today's session. So big thanks to ACM Gold for putting on today's webinar. And if you do have any questions at all, feel free to get in touch with us with the details on the screen. Good luck for the rest of today's training and next week, of course. And we will see you back here the same time next week. So have a great weekend, guys, and we'll see you on the next one. Cheers. Bye-bye.